Do you mind calling everyone in if there's any stragglers working on it? All right, ding away. So, so this is our famous Shark Tank, which is either it's kind of like a fund or flop, but it's hopefully if it's not a fund, hopefully it's not a flop where it's a snooze fest. And I do apologize because last year I will admit there were some snooze fests on the Shark Tank, and that's unacceptable.
No talking basketball statistics this year.
Right. So we're going to be to the point. Our presenters here are very fine, esteemed presenters here. They know the drill. They know that your attention span is short, theirs is shorter, and that they expect a good pitch here. 10 minutes. Craig, I think, is going to be.
I will be policing it very strictly.
That's right. So basically, we've got 3 presentations, 3 different panels of sharks that are experts ready to hear out the deal. There's going to be time for the presentation, then time for the sharks to weigh in, and then there's going to be time for Q&A. So if you guys want to put your shark hat on, you'll have your chance as well. Without further ado,
10, 10, 5.
10 minutes pitch, 10 minutes sharks, 5 minutes Q&A. Without further ado, I'll pass it over to you guys.
Great. Thanks, Rob.
Thank you, Rob. All right, I'm Mike Sullivan with Aspen Funds. Afternoon, Sharks. Afternoon, everybody. Good to talk with you.
And I'm Steve Woodruff, also with Aspen Funds. Great to be with you guys.
So we don't have a lot of time, so we're just going to dive in.
So very quickly, we want to give you just a very high-level understanding of Aspen Funds. We've been in business for almost 12 years. We were founded really coming out of the great financial recession. Our founders, Bob Frazier and Jim Malfugio, realized that there was an incredible opportunity buying mortgage notes at a significant discount. They created the first fund. That fund is still around today. We've collected $225 million of investor capital. We have $550 million of assets under management, and we're proud that we've distributed $70 million to our investors since inception. And I'll also share that our process is really to take a top-down look, macroeconomic first, to understand what key trends are likely to occur and continue for a long period of time. Then we select the asset class and build a best-in-class team to help execute that strategy effectively.
All right, we're going to dive in on the asset. I'm going to give you a quick executive summary so you kind of have some context for what we're talking about. And then Steve's going to give us some higher level information. But simply, executive summary here, we're building a project is five building location in Wichita, Kansas. The first phase of this, which is what we're pitching here today, is 2 buildings, Class A industrial. These are 430,000 square feet total. It's fully entitled land. We've been working on this project in advance of purchasing the land. We've been working on those entitlements. So everything's ready to rock. We're going to get started on construction in October. So prime location, building on a successful business plan in this market from last year. And so total equity check that we're seeking on this investment is $13.5 million.
So you might be asking why industrial? It's been kind of a sleepy asset class for a while. Small rent increases each year, not huge returns. It's typically very stable. But that was really during decades of seeing manufacturing jobs move out of this country with offshoring. And it still was able to achieve pretty decent returns. We've seen a major change post-COVID. Manufacturing was starting to come back, but after major supply disruptions that we experienced, that's really accelerated these manufacturing jobs coming back. So if we're able to manufacture it close to home or on U.S. soil, that's preferred. We've actually seen imports from Mexico to the United States exceed imports from China for the first time in decades. So manufacturing jobs are absolutely coming back to this country, and they're coming back quickly. I'll also just point out that there's a few things that are likely to help outperform, and that's really logistics hubs near major cities are poised for outperformance. According to BlackRock, we are looking at secondary and tertiary markets where we're seeing more outperformance, better cost to manufacture buildings than in primary markets. And we also have noted that vacancy for smaller properties, really 250,000 square feet and under is where we see the lowest vacancies, and that's really been our focus.
So some of you probably asking why Wichita? So Steve just touched on a little bit of that, but specifically us. I mean, we're located in the Midwest. We're based out of Kansas City. So this is just in our backyard. We know this market really well. One of our partners is actually from Wichita, so we've been able to source a lot of the deals off market through the relationships that we source there. But kind of zooming out specifically this market, this is a huge manufacturing hub compared to, say, Kansas City. The skilled labor force in this particular market per capita is number 4 in the country. So tons of skilled labor. It's got a deep history in the aviation industry, deep history in agriculture space, food processing. All of that is a big hub here in Wichita. So we're continuing to see that. So there's nearly 900 manufacturing firms in Wichita alone. It's a major corridor for logistics. So we're right on the I-35 corridor, north and south, I-135, access to railways there. So it's a key hub in our region for everything manufacturing. So a couple of the large tenants that are here. So this particular product is going after national credit tenants, mostly publicly traded companies. So this will just give you an idea of some of those companies that are there and have been actively leasing industrial space for the last decades. So proven business plan. Again, this project is building on success in this same market. So we launched in Q1, January 2023. We launched Iron Horse Industrial. So I'm going to show you just a couple of highlights from that project to show the proof of concept for this market. So we had 2 buildings there, approximately 330,000 square feet. We've got a regional builder who completed it on time, under budget. We were able to, currently that project right now is tracking at a 21% IRR. So building 1 now has a successful credit tenant in there. We are currently in a refinance on that first building. So we're going to do a cash out refinance and return 25 to 30% of the allocated capital to our investors here from just building 1. Building 2 is completed, now in lease negotiations with actually several interested parties. So we expect to have that leased here shortly, and they'll be doing the same and returning, somewhere in the 25 to 30% of that allocated capital for building 2 back to those investors. So a lot of momentum here. Kind of continue here. Here's the completed project that'll just show you the grade that we're talking about. So you guys are probably seeing this in your market.
So a couple of project highlights. Like we said, there's a lot of guesswork that we've already removed. We've done basically the same project, the same building, the same market. We're using the same builder, the same broker, the same bank. We are going to be working with the same potential tenants that we're already talking to now. We understand what it is that they're looking for. We know which tenants are looking to expand or get new space. So we feel very confident with the numbers we're able to provide. And we'd also wanted to point out that there are some pretty good tax benefits as well, in addition to strong returns. No cash flow expected to investors for the first 2 years at least, while we construct and get it leased up. But with the cash flow refinance, that's what we'd expect to pay to investors. And then obviously at the end of roughly 4 years, we would plan to sell the property. And tax benefits, losses expected year 2, essentially. It's like 2025. And then sale probably 2026. Our debt terms, we have a 65% LTC. We have roughly a 7% interest rate. It's interest only for 2 years, and then we have a mini perm option for the following 2 years. We'd also like to point out, this is a recourse loan. Our partners are signing a personal guarantee on the project. And is that it?
That's it on that.
Yeah, all right.
So going to quickly just summarize here. So we've got 2 share classes. Just for sake of brevity, I'll focus on Class A shares. So $100,000 minimum investment. We've got a 7% preferred return, accrues from day 1. We've got a 70-30 split on everything above the pref. So we're targeting net annual returns 20 to 25%, equating to 18 to 23% IRR and a 1.8 to 2x multiplier over that 3-year base case. We've modeled a few scenarios. That's why you see the 3 to 5 years, but base case scenario would be a 3-year hold. So just in summary, key reasons to invest. So seasoned sponsor, again, we've got over 11 years experience. High demand, low vacancy, particularly for this asset type and this asset size in this market. We've got a proven business plan building on our success that we've seen with the Iron Horse project. Full alignment and co-invest. So all of our partners are going to be personally invested as LPs on the same terms as our investors. In addition to that, as Steve noted, they're signing personal guarantees on the recourse note. Attractive debt terms, so same bank that we've used in the same market. So Central Bank, previously Central Bank of the Midwest. So we've got a great regional relationship with them. We have a guarantee max contract from the regional builder that we're working with. Again, they delivered on time, under budget. And we've modeled several scenarios, so I'm sure you guys will have a ton of questions, but we've modeled several scenarios in the underwriting, but we've got a few different options as we look to exit the property. So appreciate you guys' time, and we'll kind of move to the data room here. If you guys want to access that, everyone will have access to this. So. Turn it over to the Sharks.
Hello? Hello.
How'd we do on time?
Great. So since we only have 10 minutes, Since we only have 10 minutes, so trying to just ask 2 questions before the comment. So one quick question. On the GP side, how much money that you putting, is there any GP fund inside? Is there any like family and friends money inside that GP portion?
So we provided the first $3 million to purchase the land. So at a minimum that.
That's the minimum. That's 100% from your.
Our partners are also,
principal.
within the syndication, the partners are each going to be contributing whatever they choose to allocate. Historically, on deals like this, it's been right around $700,000 to $1 million in their personal capital.
Okay, got it. And another quick question. So since the market is mature, very mature market, and you're doing repeat deals, same business plan, same team, what's the story behind it? What's the support that showing there's still a demand for that type of business plan?
I think with interest rates obviously been on a tear, there's been just fewer starts. So there's no new inventory hitting this market. We've got a bunch of graphic information that we could dive into if you really want to, but really what we're starting to see is now that supply curve and demand curve, we're starting to see that intersect again, similar to what we saw pre-2022. So that's that kind of key moment in time right now. It's just fewer starts, which has constrained supply further, and still pent-up demand.
Also, in this market specifically, there's been a significant number of potential tenants interested in our current properties that we had available. And so we're very confident that we understand what they're looking for and that there is demand.
A slight tag onto that would be some of that leasing traffic that we're getting from our second building from Iron Horse. We're actually working with our broker to try and convert that to build a suit on this next project to significantly reduce risk on the next development.
Great, thank you. Yeah, I would say overall, 10 minutes presentation, this has already covered a lot of important information. I would say we probably wanted to know a little bit more about the team, like how you're going to manage all the risk, asset management included, and definitely a little bit more kind of market data, simple market data to show that still demands in that market and also for the future growth. But overall, I think this is good presentation.
Great, thank you. And all of that is in the data room. So if you
We condensed them a little bit, so just a little bit.
Yeah.
We'll give you 20 slides on market data, with lots of it.
Is the mic on?
We can hear you.
Hello, hello? Borrow. Yeah, borrow this one. Thank you so much. Hello? Okay, much better. So you guys are obviously a real group, real sponsor, and you have the track record. Coming from a firm, it's an online investment platform. We raised $4.5 billion of equity across $20 billion worth of real estate. So I would disagree with your first statement where industrial returns are relatively modest. Some of our best returns were in the industrial space. So, don't lead with that. And you're projecting a 20+ net IRR, and that's not modest in any kind of meaningful sort of way. So to say that you have a good product, good sponsorship, but the presentation is just not as strong as it should be. You should, in my opinion, seeing a lot of these, right? And you do have, let's say you have 10 minutes to grab someone's attention. Likely most of the investors here, they're speaking to so many people, they're making a decision within 2 or 3 minutes, right? Lead with the case studies. You've done this in the past, and you're already showing a deal that you've executed on conceptually in the past. Okay, that's interesting. I'm hooked. Okay, Wichita, Kansas. We do deals all over, so it's okay if I'm not intimately familiar with the market. It's not Queens, it's not the Bronx, or it's not Inland Empire or anywhere like that where we've transacted in the past. But you're the experts, and you have to say you're local. You're the experts. You know how to execute. What I would also improve in a presentation: stick with one IRR versus a range. Right? You're not a broker dealer. Pick a base case, present it. Maybe down the line you present a downside scenario. There's some redundant information in there in the sense of you showed an IRR and then you also showed a rate of return. Like, what's the difference between the two to the investor? Investors typically, as we understand, look at IRR, equity multiple, cash on cash, right? Time to execute. Those are the things that you should lead with. So you should be stronger in the presentation. You're not seeking $13.5 million. You're giving us the opportunity to get a piece of that $13.5 million before it's gone, right? You're creating this FOMO effect, right? Come with it from a position of strength. Come with it from the position that you've built up a portfolio of $500 million, right? And you know this market down cold. You've worked with the GC. You could control costs. GMPs are sometimes called guaranteed minimum price, right? Usually people go over, but talk about how you've executed with the contractor in the past and you stayed under budget. Hopefully, if you've had, I think you have a pretty compelling deal here with a pretty compelling sponsor.
Great. Thanks for the feedback.
Thank you.
First question, the land is being contributed at original basis, what you guys purchased it for?
That is correct.
So you point that out. A lot of deals, people mark up the land. Second thing, the fact that your deal is sponsorship assigning recourse on the deal, that probably should be the first thing you want to say, because that means that somebody has real skin in the game. So then everything you're saying afterwards, I'm going to believe. So that's a very powerful thing, that fact that they're signing recourse in terms of that. And really just echoing like you said, we see a lot of deals, right? I just put out money last week in the industrial deal. My first thing I wanted to know is, what's your experience in the market? What do you know about the market? I have CoStar, I've already made, I have all the data in my office. I'm going to pull it all up. The reality is data can be manipulated 20 ways. We all know that. I'm going to be trusting you that you know your data. So show me your experience in the market. The rest of that, I'll trust you, and I'll go with the flow, but just show your strength. You have it, sell it. And industrial is a great asset class. It's not, it's not a stepchild. You could sell it. It's a great asset to be in. If you're buying it well, you're buying strategic. I think it's a great, asset to invest in. So just, it doesn't only have to be multifamily. We're investing in it. We think there's opportunities there. So go crush it. But I think it's a great deal. I think it's, you have a really nice deal there. So good luck.
Great. Thank you.
Yeah, really appreciate. I think it is a good opportunity. I think a couple questions to start off that I wanted to know. Why Wichita? More so just that you're there. I think it would have been helpful to know, what are the barriers to entry here? What secret sauce are you bringing as a local operator that you can't get from somebody else? What kind of demand is there? I know you'll have tenant, the TIM reports and everything to dig through, but really, why is it a compelling area? What kind of players are in the market? How you're developing 5 buildings. What's your exit strategy other than just refining out, especially if you're showing a 3 to 5 year hold, right? Is there big projects? Are there institutions that are going to buy out? Kind of showing your market expertise there, I think would come through and really get people, why Wichita? Because there's a bunch of other markets that probably people is on their A list opposed to Wichita. But you guys know it. I think you should kind of, brag about how well your phase 1 is doing, and be specific of what tenants, to the extent you can actually communicate that, would give people, comfort with phase 2. One of my questions was, if you're in phase 2 or getting in the later phases, have the best tenants already taken space? So as an investor, what's left? What kind of demand's left? I know you said you're having conversations to expand, but I think kind of getting that story and the compelling reason why Wichita, why you guys, I think would help drive it. But the metrics, again, I wouldn't apologize for the returns. Those are pretty strong returns for industrial. So I think there's something there. I think just kind of cleaning up that Wichita story would definitely help me.
Appreciate it.
Any final questions from Sharks or comments?
I think it's a very nice looking deal.
We'll send you more info.
Yeah.
Good deal. Probably scrap the entire Y industrial component because it's such a niche market space, right, or market that you're in, and just talk about, maybe logistics, talk about small bay, talk about something hyper honed in on industrial, right? Because, you could, it's a very, very large asset class. And you could talk about it all day. 2 slides won't cover it. Just talk about your specialty in it.
Yeah. So it's really to emphasize the strengths, emphasize the attraction, why we have to do the industrial investment, and then put in all those strengths that you have to make people interested in a very short period of time.
Great, thank you.
Audience, any questions you may have?
Thanks for your time, everybody. Appreciate it.